4 years ago, I couldn't bring myself to invest in the stock market because, like many of you, I kept asking myself, how do I know this is actually going to work? What if it doesn't? And the truth is, 4 years later, I still don't have the answers to those questions. But despite that uncertainty, I started investing, and today the portfolio is up over 20% and I'm on track to building towards $1 million retirement portfolio. I hope that by sharing the mindset shift that got me started, along with the lessons that I've learned along the way, it'll give you the confidence to begin your own investing journey too. So without further ado, let's dive straight into today's video. Let's go. So let's address the elephant in the room. How do I know investing will actually work? The answer is I don't, and neither does anyone else. Nobody can promise you what the stock market will return over the next 10 years. Nobody can promise you that your investments will never lose any money. And nobody can promise you that there won't be another financial crisis. Those guarantees simply do not exist. And if someone promises you that, please run. But do you realize that if you have invested in something as broadly diversified as the S&P 500 index fund that invests in the top 500 companies in the US, it survived those crises? Instead of thinking, will this definitely work 20 years from today, I started asking, what can I do to give myself the highest probability of success over the long term? That's when I came across a concept from the psychology of money that completely changed how I thought about investing. Room for error. The idea is simple. Don't build a financial plan that only works if everything goes perfectly. Build one that still works even when things don't. The goal isn't to be right 100% of the time. The goal was to build a financial plan that's strong enough to survive the times when I'm wrong. Once I accepted that certainty doesn't exist, another question that came to mind, one I'm sure most of you have asked yourself as well. If I don't know whether it will work, why invest at all? For me, the answer was surprisingly quite simple. I invest because I believe that it will give future me the best chance at living the life that I want for myself. If I don't invest at all, I'm relying almost entirely on my ability to earn an income every single month. If I simply leave my money sitting in a bank savings account, inflation will slowly reduce what the amount of money can buy. So I choose to invest not because I'm certain of how things will turn out 20 years from now, but because I believe that it will give me the best odds at building the life I want for myself in the future. I'm also investing for that freedom of choice 15 to 20 years from now when I'm 45 to 50 years old. The choice to work because I want to, not because I have to. The choice to also retire before the traditional age of 65. Every dollar that I invest today is buying future me a little bit more freedom tomorrow, and that is the whole reason why I invest. That said, even though I'm investing for future me, I'm also not investing every last bit of cash that I have saved. So naturally, the next question I asked myself was this: how do I know how much to invest? And this is where I want to bring in something really practical. I sat down with a compound interest calculator. Nothing fancy. You can find this free online. I'll leave the one that I used linked down in the description box below. I plugged in a conservative 6% return per year, not 8% or 10% traditionally. That's what the S&P 500 returns, but I'm accounting for inflation and currency risk, so a more conservative return of 6%. I ran it for 30 years, and here's what I found. If I want to retire with $500,000, I need to invest about $500 a month. If I want 1 million, it's about $1,000 a month. If I want 2 million, which is the number that I'm working towards, it's about $2,000 a month. And this is the part I wish someone told me 4 years ago. There's no right amount to invest. The number isn't found in some finance guru's formula or copied off a Reddit thread or whatever your colleague or friends is doing. The number comes from actually working backwards, from asking myself, what do I want future me to have? And then letting the calculator tell you what that costs today. So for some of you, that might be $500 a month starting today. It could also be a longer time horizon, then the amount that you're putting in today is much lesser. Neither is wrong. What matters is that number is yours. You have to find this number for yourself. Build it around your goal, your income, and your life, because that's the other half of room for error. It's not just about investing conservatively, it's about investing an amount that lets you live your life today while building the one that you want tomorrow. So let me bring this back to me. What does it actually look like in real life? 4 years ago, when I first started investing, I was investing $300 a month. As my income grew over the years, I increased it from $800 to 1,000, and today I'm investing $2,000 a month. I'm building this portfolio on Interactive Brokers, a platform that gives me access to the London Stock Exchange, which comes with tax advantages alongside low fees and great foreign currency exchange rates. If you'd like to find out more, you can scan this QR code on screen or check the link down in the description box below. I'll also leave the S&P 500 playlist down in the description. I did that for two reasons. One, my income grew, so naturally I had more room to invest rather than let the money sit in a bank savings account. And back then, I wasn't saving up for a house down payment, but over the past 1 year, I was. Two, the more I put more in today, the less time I need for it to grow to the amount that I want. My plan is to keep investing at this level at least for the next 20 years, and if I do, this portfolio will grow to a little over $1 million. And if I get there and realize that I don't actually need this amount of money, I can simply stop investing new money in and let what's already there in the account to continue compounding on its own. When I was taking home $2,500 a month, I was investing $300. That's 12% of my income. Today, I'm investing $2,000 a month. That's about 15 to 20% of what I make. And I want to call this out because so many people online will actually tell you that you need to be investing 30, 40% or even 50% of your income if you're serious about building wealth. I don't think that's true, and honestly, I think it scares a lot of people off investing altogether. The goal is to balance enjoying today and building towards your future. So here's something that I think a lot of Singaporeans forget when they actually do the math. We're not just relying on this investment portfolio for our retirement. We also have CPF Life. That's a monthly payout for life on top of whatever that we build for ourselves. It's already a retirement floor that most other countries don't give their citizens. So when I'm calculating how much I actually need my portfolio to grow, I'm not calculating as if my investments are the only thing standing between me and poverty in old age. I'm calculating on top of the base that CPF Life already provides. So which means I don't need to invest more than 50% of my income to feel secure about my future. One of my goals is to also hit full retirement sum in my CPF accounts. Why? Because that's my room for error. If my investments do well over the next 20 to 30 years, great. That's the upside on top of what I already have. But let's say if things doesn't work out, then at least I have CPF to fall back on together with the bonds and the dividend income portfolio that I'm building. So when people ask me, aren't you scared investing might not work out? My answer honestly is less scared than I used to be. Not 100% fearless, but a lot more confident than I was 4 years ago. So even in the worst case scenario, I'm not starting from zero. I have a flaw. Investing in the stock market is how I try to build wealth beyond what I need. CPF and the full retirement sum is how I make sure that even if investing doesn't work out the way that I hope, future me isn't left with nothing at all. That's my room for error. So invest enough so that future you is taken care of. As for the rest, after taking into account your day-to-day living and emergency funds for the unpredictable moments that seem to always find their way to us, use it to build the life that you want today. For me, that meant building my reserves for the past 9 months for my home down payment. Sometimes it will also mean trips with family, nice food with people that means the world to me, experiences that create memories with the people that I care about. So if there's one thing I hope you take away from today's video, it's this. You don't need certainty to start investing. You just need a plan that still works even when you're wrong. 4 years ago, I didn't have the answers. Today, I still don't. I don't know what the market will look like 20 or 30 years from now. Nobody knows. But I've stopped waiting for certainty before I act. Instead, I built a plan with room for error, one that lets me invest for future me while still living the life that I love today. That's what I want this video to be about. Not having it all figured out, but starting anyway with a plan that's strong enough to survive being wrong. If this has helped shift the way you think about investing, that's all I hope for. If you have any questions, as always, leave it down in the comments section below, and I'll catch you guys in my next one. Bye-bye.